Are we on the brink of another recession? Michael Burry, the legendary investor who predicted the 2008 financial crisis, thinks so. Michael Burry, renowned for his role in The Big Short, has made a striking prediction of a colossal stock market crash in 2023. This prediction is not to be taken lightly, considering Burry's track record. Welcome back to our channel. Today, we're going to talk about something serious about the new warning for the 2023 recession discussed by Michael Burry. If you're new here, don't forget to hit the subscribe button and the bell icon to stay updated. If you find this video helpful, do us a favor and hit that like button. Now, let's get into it. Michael Burry's predictions. Michael Burry was one of the few who foresaw the 2008 financial crisis, a prediction that earned him legendary status in the investment world. Burry's warning for 2023 is based on several factors. First, he warns that the US is already in a recession. This is a significant claim, considering that the National Bureau of Economic Research, the official arbiter of U.S. recessions, has not yet declared an official recession. However, Burry's assertion is based on his analysis of current economic indicators, which he believes point to a downturn. Second, Burry expects another inflation spike despite a temporary peak. Inflation has been a significant concern in recent years, with rates reaching their highest levels in decades. Despite this, Burry believes that inflation has not yet peaked and that we can expect another surge in the near future. This is a worrying prospect for consumers and businesses alike, as high inflation can erode purchasing power and increase the cost of goods and services. Burry's predictions are not just about the U.S. economy. He also anticipates a cycle of interest rate cuts, government stimulus, and subsequent inflation. This cycle, he warns, could have far-reaching effects on the global economy. His predictions have sparked discussions about the upcoming recession, with many investors and economists paying close attention to his warnings. In addition to his predictions about the economy and inflation, Burry has also made some specific predictions about the stock market. He has warned of a significant stock market crash in 2023, drawing comparisons to the dot-com bubble and the Great Recession. According to Burry, current market conditions are being artificially propped up by retail investors, which could lead to a severe correction when the bubble bursts. Burry's warnings have been echoed by other prominent figures in the business world. Business leaders like Elon Musk and Jeff Bezos have also cautioned about a recession and advised risk reduction. These warnings, combined with Burry's predictions, paint a concerning picture of the economic landscape in 2023. However, it's important to remember that predictions are just that, predictions. They are not guarantees of what will happen, but educated guesses based on available data and trends. While Burry's track record lends credibility to his predictions, other economists and financial experts have different views. For instance, Bank of America's chief economist, Michael Gapin, believes 2023 could be a difficult year, but suggests the Fed has the ability to control inflation without causing a severe recession. The economic landscape. As we delve into the economic landscape that Michael Burry is warning us about, it's important to understand the broader context. Economists predict a 70% chance of a recession next year, with the Federal Reserve's interest rate hikes expected to reduce demand. This is a significant shift from the economic growth we've seen in recent years, and it's causing concern among investors, businesses, and consumers alike. The Federal Reserve's role in this landscape is crucial. In an attempt to curb inflation, the Fed has been steadily raising interest rates. While this strategy can be effective in controlling inflation, it also has the potential to slow economic growth. Higher interest rates make borrowing more expensive, which can discourage businesses from investing and consumers from spending. This in turn can lead to a decrease in demand, which is a key driver of economic growth. Another global issue that could impact the economic landscape in 2023 is the potential decline of the US dollar. The US dollar is the world's primary reserve currency, and its value has a significant impact on global trade and financial markets. If the value of the dollar declines, it could lead to increased inflation and economic instability. Finally, there are shifting alliances and power dynamics among the BRICS nations. These countries are some of the world's largest emerging economies, and changes in their relationships and policies can have significant impacts on the global economy. The economic landscape in 2023 is shaping up to be a complex one, with a variety of domestic and global factors at play. While the possibility of a recession is concerning, it's important to remember that economies are dynamic and can be influenced by a wide range of factors. As always, staying informed and understanding the broader context is key to navigating these uncertain times. The Fed's role. The Federal Reserve, as the central bank of the United States, plays a crucial role in managing the country's economic health. In the context of Michael Burry's predictions for 2023, the Fed's actions and strategies are particularly significant. One of the primary tools the Fed uses to manage the economy is interest rates. By adjusting these rates, the Fed can influence borrowing costs, which in turn affect spending and investment levels. In 2022, the Fed raised rates significantly in an effort to combat inflation. This strategy can be effective in controlling inflation, but it also has the potential to slow economic growth by making borrowing more expensive. Despite the rate hikes in 2022, Burry anticipates that the Federal Reserve will cut rates again, leading to increased inflation. This prediction is based on his analysis of current economic conditions and trends. If the economy continues to slow and inflation remains high, the Fed may feel compelled to lower rates to stimulate growth. However, this could also lead to further inflation, creating a challenging cycle for the Fed to manage. The Fed's role extends beyond interest rates. It also has the power to implement various forms of monetary policy, such as quantitative easing, to stimulate the economy. In the past, the Fed has used these tools to inject liquidity into the economy during times of crisis. However, these measures can also contribute to inflation, particularly if they lead to an oversupply of money in the economy. The Fed's actions are closely watched by investors, businesses, and governments around the world. Its decisions can have far-reaching effects on global financial markets and economies. For example, a decision by the Fed to cut rates could lead to a depreciation of the US dollar, affecting international trade and potentially contributing to global inflation. The Fed's role in managing the economy is not without controversy. Some critics argue that its actions can lead to asset bubbles and financial instability. Others believe that the Fed has too much power and that its decisions can have unintended consequences. Despite these criticisms, the Fed remains a key player in the US and global economies. What can investors do? Burry strategies. In light of Michael Burry's dire predictions for 2023, many investors may be wondering what steps they can take to protect their portfolios. While there's no one-size-fits-all answer to this question, there are several strategies that investors might consider. Firstly, Burry has suggested that gold could rally amidst potential crypto contagion risks. Gold has traditionally been seen as a safe haven asset during times of economic uncertainty. If Burry's predictions come to pass and we see a significant market downturn or increased instability in the cryptocurrency market, gold could potentially offer a degree of protection for investors. However, it's important to remember that all investments come with risks, and past performance is not a guarantee of future results. While gold has performed well during some past recessions, this has not always been the case. Investors should carefully consider their own risk tolerance and investment goals before making any decisions. In addition to considering safe haven assets like gold, investors might also want to review their overall portfolio diversification. Diversification can help to spread risk and potentially smooth out returns over time. This might involve investing in a mix of different asset classes, sectors, and geographical regions. Another strategy that investors might consider is focusing on value investing. This involves buying securities that appear to be underpriced by some form of fundamental analysis. Investors can also focus on these three key elements: value, undervalued assets or companies, and market overvaluation. However, value investing requires a good deal of research and a willingness to go against the grain. It can also require a longer time horizon, as it may take time for the market to recognize and correct the underpricing. While it's important to take note of Michael Burry's warnings, it's equally important for investors to do their own research, consider a range of perspectives, and make decisions based on their individual circumstances and risk tolerance. As always, if you're unsure about what to do, it may be worth seeking advice from a financial advisor. Another aspect of Burry's strategy is his willingness to take a long-term view. Despite the potential for short-term market volatility, Burry often focuses on the underlying fundamentals of an investment. This long-term perspective can potentially provide a buffer against short-term market fluctuations and help to identify investments that offer sustainable returns over time. But remember that while Burry's strategies have been successful in the past, they are not guaranteed to be successful in the future. Investing always involves risks, and it's important for each investor to carefully consider their own risk tolerance, investment goals, and individual circumstances before making investment decisions. Michael Burry's strategy for the potential 2023 recession involves a combination of value investing, a long-term perspective, and a willingness to consider traditional safe haven assets. As always, it's important for investors to stay informed, consider a range of perspectives, and make decisions based on their individual circumstances and risk tolerance. Remember, the future is uncertain, and the best we can do is to stay informed, stay vigilant, and make the best decisions we can with the information we have. So if you found this video helpful, please give it a thumbs up and share it with your friends. Don't forget to subscribe and hit the notification bell icon for more financial views and insights. Before we wrap up, we'd love to hear from you. What are your thoughts on Michael Burry's predictions? Are you adjusting your investment strategy in light of these warnings? Let us know in the comments below. And if you want to learn more about investing, we got lots of videos about it. Check the description box below. Thank you for watching, and we'll see you on the next